All right, so how has the week been? How has the week been? Last week we made a couple of bold calls, higher time frame calls, and most of them played out, really, really well. They all played out just as how we were anticipating. And I think some of you guys actually caught those moves as well. I saw a few of you guys actually tweeted at me on my X. Namely, we have Embody. Hopefully I pronounced the name correctly. You tweeted at me saying that you took the dollar Swiss buy that happened, really, really perfectly. Let me know if any of you guys actually took that trade as well. And if you guys do take those trades, just feel free to tweet at me. I'd love to hear the progress you guys are making on your own analysis or on your own trading. So let's get started. Let's get cracking. Again, this is the second installment of the market breakdown series. Again, we're keeping it light. We're not gonna go into in-depth analysis. We have a designated place for that in these weekly breakdowns. I'm just gonna be breaking down what happened last week, which was obvious, the easier kind of trades that would have been taken last week. If you guys haven't taken it, we can run through them. The major things that could happen this week, the easier type of setup that may happen this week. I'm just going to give you the directional bias, and then you guys find your way into those trades, right? Because everyone trades slightly differently. Some traders are a little bit more aggressive, some people are a little bit more conservative, but as long as I give you the directional bias, your job as a trader is just getting good at understanding where the precise entry is, the perfect entry for you, the perfect exit for you, that sort of thing, right? Because as traders, one of the main things that people always get wrong is just focusing on where to get in, but not knowing that if there is a reason for price to reach a certain target. Because if there's no reason for price to reach a certain target, wherever you get in, there's just no point. So we need to fix two things. Well, not really fix, but focus on two things together, right? First, understanding that if there is a reason for price to be pulled to a certain specific level, once you really, and that's what we call a directional bias, right? You have a higher time frame suggesting, your big boy suggesting that we need to get from point A to point B. But once you know that, we're going to point B for sure, okay, the next part of the job is getting in and managing your trade. Now that's the part where I can't be there watching you how you manage the trade, right? That's something that you need to really get good at on your own, because otherwise, that's going to be a $10,000 course. Just kidding. Okay, I'm just going to look at one more comment before we dive into the charts. Chiranjeev, you're saying I watched the volume video for P2P on YouTube and I have a question. You say in the video to monitor volume on reactivation near support and resistance zone. If big boy time frame is the 1 hour, trading time frame is the 15-minute, can I monitor volume? Of course you can, right? So volume happens on any time frame, every time frame, right? So there's no hard and fast rule on which time frame should you watch the volume on. Of course, if you're watching the volume on the 240 time frame, let me just pull out my chart here. 1 second. Okay, can you see my charts? Okay, so of course, if you use volume and then you put it on the 240 time frame, for the most part, it's gonna look relatively similar, right? There's not gonna be too much difference, just because the volume on the 240 time frame. They're just taking the volume of each session into account, and each session is like 3 bars long. So it's more or less the same, you will see, right? Even here, you can't see much difference. Of course, here, it's relatively higher, but the lower time frame you go, the more obvious those high volume situation is going to be. So just take that into account. But to answer your question, yeah, you can use volume on any time frame. Okay, so let's begin with what we were talking about last week. Dollar Swiss was the pair that we were talking about, and when we were speaking about this last week, we were I'm just going to use the bar replay here. We were on about here on Monday, right? This is the part where we were on. So hopefully no one took a loss on this trade. It's a bit tricky, I have to admit. This trade was a bit tricky, but we were anticipating that price is going to come down here. and then slowly reject back up, and then moving up towards the upper side, right? There is a few things that we were concerned of, especially on the daily time frame. We are coming right into this huge support equals resistance zone, which sort of just tells you that you don't want to just look at support and resistance area and then just think, okay, price reached there, it's gonna drop for sure. No, that's not always the case, right? You have to take price action, market context into account, right? That's what at Urban Forex we really focus on, reading price action, right? That's what we're known for. So on the 240 time frame, in situations like this, you have to start thinking of what the big boys are doing, right? We're coming into a huge higher time frame level. We're in a huge downtrend. We are coming right into it. If the big boys are that strong, we should really see a fast move push towards the downside, right? We should see sellers really activating. On the flip side, on this pullback, we also see we are, breaching out of this huge range here. So right above us, above market, we have the higher time frame big boys trying to sell. Right below us, we have sellers being trapped, and on the lower time frame, this area would act as support to potentially push price higher. So what's that? That's it, essentially a money spot, right? Which means in this zone here, right? This zone here, there's buyers and sellers fighting. So then, okay, that's what we understand. Buyers are trying to buy from the bottom, sellers are trying to sell from the top. Now that does not mean you can't take a trade, because if you're always waiting for things to resolve to the upper side or lower side, then you're just always waiting for a clean breach and a pullback to look for a trade, which is fine, but sometimes you might be missing out on a lot of trades, because some trades, they activate very strongly in the money spot area. So having that said, right, we know sellers are selling from the top, buyers are buying from the bottom. Our job is now to understand or to figure out how good of a job the sellers are doing, right? So we're really tracking the sellers here, and that's your whole goal, really tracking, seeing how well is the sellers performing. You can see each move along the way. We have one move down here, another move down, let's say third move down, and then the fourth move down. Look at the way that's going down versus the previous way that went down. This took 2 bars going down. This took 1, 2, 3, 4, 5, 6, 7, 8, 10 bars going down versus the last time it took 2. And look how far it traveled, just 10% further than this down push. Again, that's just telling you, again, sellers are really losing power. The question you always want to be asking yourself is, if that's an area where sellers are going to be hitting the sells, how good of a job are they doing? Not particularly a good job, right? The way that it's moving down, it's not a good job. You couple that with gauging momentum, understanding if the buyers are going to step back in, not understanding but looking for buyers to step back in. And when we see something like this, consecutive buyers pushing up strong, these are the areas where you should be thinking, okay, it's probably game over now for the sellers. Sellers are really on the back foot. And at the minimum, the buys that you're going to be taking here on the 1 hour time frame, 15-minute time frame, you should be at least targeting areas like this. It should be, right? Because that's where most of the sellers were starting out from. And just see how well they are able to push down. And when your buyers did show up, it's not like it's showing up in a random spot. It's showing up at a spot where people were trapped before, right? Because this is pretty much like a range. Right? And this is the high end of the range, and buyers are showing up there. Sellers are failing to move down from there. So you couple that with correlation. We have correlation last week on the dollar strength across the board. You couple that with the correlation that was going on. If you get in on this trade here, your minimum target should be at least this area here. Okay. Now this answers one question someone had in the chat earlier. And they were asking about, exiting. You're always getting out early and then seeing price move further. There's a few ways to approach that. Let me just see, whose question is that from? I swear to God, someone asked me about exiting. Umesh. can you define the take profit in more efficient way? I'm taking trade in right way, and after reaching at least 80 to 90% target, it reversed. How to avoid it? Please help avoid this. I can't really give you a clear answer unless I see the way that you're trading. But you need to first figure out, is that happening all the time? If that's happening all the time, then simply just reduce your take profit by 10-20% and see how well that works. Because within your question right there, it lays the answer, right? It has the answer. So just try doing that and see how well it performs. But if you want a more technical answer, it's just getting out at the next level. All right, market moves in a way where every SNR in the market is like a magnet. It's either gonna attract price or repel price. So when we, let's say we get in here and price gets up there, it's gonna repel price or attract price to move further up to the next level, repel, and then maybe here, price attracting back down and then repel towards upper side. So perhaps you're, having your support SNR drawn too far away. When price reaches there and slowing down, you're not getting out. There's that sort of a thing, right? Or if you're getting out and then price almost reaches your target, doesn't feel you, it pulls back like this, right? And then you get out here to see price going out further. Then that's something where you have to fix your main target, right? Is it okay where you just hold on and let price reaches the next area? Most of the time, if you journal your trades and have everything documented down and see, how does your trade actually plays out after 10-20 candles, you would be able to find an answer, right? There's a very good saying out there, which is, you don't need to have a trading mentor or a trading coach if you have a good trading journal. If you're logging your trades every day, day in, day out, and being able to look back at your trade results, if you're able to do that, if you're able to do that, you don't really need a trading mentor, because a trading mentor is there to help you, give you the strategy. Once you have the strategy and you're seeing how your trades are playing out day in and day out, your answer is generally in your trading journal. Okay, so dollar Swiss performed well. Again, entry, it's pretty tricky, right? I was looking at this as well, and I can really suspect that things were really tricky. Price pulls back. If we really look at the nitty gritty here, price pulls back, try to go up, a very strong spike towards the downside, and then it moves up further, right? And all of this happened pretty much in the dead hours. This pullback here would be another entry right there. This pullback here would be another entry in the dead hours. And we see price going up again in the Asian market. It's really slowing down, and the actual pickup when price really moved was after a huge spike towards the downside, and then it went up. So I'm not gonna discount this, saying that this is an easy trade to get on. It's definitely not an easy trade to get on, but again, that's something that you will have to work on it yourself to really find the perfect entry, to find the right spot of gauging momentum, all that kind of stuff to get in. But having that said, if you're looking at correlation, there is actually much easier trades out there than dollar Swiss, which I outlined last week. So the place that we were looking at for potential buy was, where was it? It was here. Let me just mark out. Just here, right? On Wednesday, 11th of March. There were easier trades out there. Which one was it? EURUSD. 11th of March, just here, yeah, right here. Oops, right there. So EURUSD, again, I covered this briefly last week about the potential buys filling, and then how you want to cut and reverse to look for the shorts, to look for the sells. But on 11th of March, the same day where dollar Swiss was moving, we have across the board all the dollar group potentially moving in the same direction, same way. And EURUSD is I would say it's a little bit easier just because, you know, we are establishing a downtrend now, right? It's in the downtrend and price is pulling back into support equals resistance area right here, and you know, we see price pulling back strong and then really slowing down here. Yes, I understand this initial move is tricky. Where can I get my pen tool? All right, this initial move was tricky, but then it really slowed down here and then the drop happened afterwards. All right, there is a clearer entry in this on the lower time frame, but this is just proving to you that, you know, if one pair is not working out perfectly, perhaps just check correlation. It might be another pair, another currency that's playing out a little bit simpler for you to get in on the trade. Okay, so on the 60, if we really go down to the 60, we will be able to see that, you know, this trade right here has, you know, all the exact things that you have learned in the P2P course. If I can just remove the drawing. So we know this red zone here is the higher time frame zone, right? And we know it's pulling back, right? It's pulling back into multiple legs towards the upper side. And if we're just using the traps and release technique, you can clearly see, you know, this is an uptrend established on the lower time frame. Support equals resistance break, support equals resistance break, support equals resistance break. And then what happened here? Buyer tries to buy, you know, we see buyer rejecting here, here, here. We're clear as day, right? And then boom, like that. Okay, it's still in the money spot because the guy who started the buy is still alive, but there are people being trapped here. So to put it simply, we can say buyers, they have 1 point. They still have perhaps 1 point because this guy is still around. We can say sellers have also 1 point just because buyers are trapped and perhaps a sell could happen. But sellers actually has another point. Why is that the case? Any guesses here? And that's because we are on the higher time frame spot where this is a higher time frame SNR, right? That's a higher time frame support equals resistance area. And then there is another point to add to this guy. What do you think that is? We are in a higher time frame downtrend, right? We are in a higher time frame downtrend as well. Yes, the trap, right? Higher time frame zone, higher time frame downtrend. So having all of that said, yes, again, we are in a money spot, right? If we really zoom in here, and really focus on this zone here, this zone right here, this is a copy paste situation of dollar Swiss, right? At the very top, people may be trapped, right? Buyers may be trapped. At the bottom, buyers may still want to buy, right? Buyers still want to buy, and there's a support equals resistance right here that could support the buy. So who's gonna win? Then that's where you really have to test how strong the buyers are. So, you know, using price action analysis, you want to look at, you know, okay, we have pullback, right? We have a pullback here. This price, buyers push all the way up. All right, buyers looking strong. Try again, no new highs, coming right back to the same spot. Okay, same spot again. Let's see what they're gonna do. Even slower, much slower than this. We have 1, 2, 3 bars going up versus what's this? 1,000 bars going up. Again, that's telling you, things are looking a lot weaker for the buy now. And couple that with everything you know about higher time frame, that sell would be a sell that you want to take in a money spot, right? Generally, when I'm talking about safer trade, you would take safer trade once things have resolved, right? Let's say it like that. However, that doesn't happen all the time, right? Sometimes you get a pullback, sometimes you don't. I just want to give you guys an idea that sometimes you can take trades, you know, in the money spot area right before it launches. So here, you know, you do see a push down very, very easily after retesting this trap, right? Very, very clean price action, and then things just move down lower. You know, if you're unable to get in, there is another pullback right there where you could potentially get in. This happened again in the active market hours, London session, before New York actually opens. So all of that happening in the you know, more active market hours where people would usually be able to get in on. Okay, and then, you know, the rest was history. You know, we had a huge move, undoing the entire move up that was caused by the panic with the Iran war. Well, there's still panic going on, not gonna discount that. But yeah, hopefully that makes sense. Does that make sense, guys? If that does make sense, please hit the like button on the video. That's really gonna help the algorithm. Is it better? Okay, there's another question. Hey Lucas, is it better not to trade in a session when there is no news activity scheduled for that session? Not necessarily, right? If there's scheduled news, that's fine. You want to be more worried about the unscheduled breaking news, like a terrorist attack. That's the kind of news where you want to be wary of. But if it's scheduled news, then it's usually fine, because you need news to really get the markets to start activating, right? So if you don't have that, you know, your trade is not going to move, right? So you still need, you know, some sort of news. If there's no news, things are not going to move, and your trade is not going to perform. Okay. Yeah, so EURUSD, we talked about $6, and then I had this bold call on X, talking about what was it? What's the bold call? Yeah, gold, right? I was, you know, talking about gold, and lo and behold, before lo and behold, I was anticipating price to go up slightly and then pushes back down, right? This is again last week, and if we look at gold and see what it has done. Let's go back to daily. Use FXCM. Yeah. We were right here on Monday last week, right there. And we did push up, came up slightly, and then dropped. Okay. I'm not going to go over the full analysis here, but the whole idea here is we are in a very, very extended uptrend. Things look like, you know, activity is suddenly picking up, and, you know, and the activity is really towards the downside, and then buyers are really, really struggling to move up. And you know, if we look at what the buyers are doing versus the sellers are suddenly hitting it very hard, right? If we pull out the volume indicator, we can see there's high volume towards the downside. I'm not sure if anyone took the sells, but I think someone tweeted at me that they did took the sell, and then made 3 R's out of it. If you guys did, you know, let me know. But yeah, this is the bar that really shows, you know, who has the upper hand at the moment. And when we struggle towards the upper side, you know, coming back into this trap area right here, I'm gonna talk about EURPAL later, don't get distracted. But yeah, remember, pulling back into this area right here, things really release down towards downside. Okay, why is that a trap? Mainly because, again, if I draw your attention to this area right here, we see that, you know, overall we are in an uptrend, right? Buyers buying, last push towards the upper side, and then boom, pushing all the way down like that, right? Once that has happened, again, who's trapped? Buyers are trapped. I'm looking at this entire zone here. And when we pull back into that area, that's the area where things started to drop. Okay, so I'm still having this picture in mind, thinking that sellers are going to continue the sells. But right now, things look a bit weak and slow. So I'm not too sure what's going to happen just of yet. But overall, again, my whole bias here is I'm going to breach down from here, pull back, potentially going lower. At least for this week, I'm seeing price getting down to at least 4,835. Sorry, can't speak now. What the heck? This price is where I'm seeing price is gonna try to get down to, at least for this week. And there's a correlated pair to this, which is silver. The pair that, you know, Warren Buffett has been hammering on for almost the last 5 years, just talking about silver. Every podcast he goes to is talking about silver, which is insane. But yeah, you know, you see price, if we really compare which one is weaker, silver is really weaker, at least if we compare it to gold. It's making a much stronger move towards the downside, and you know, we're making lower lows at the moment, and you know, price is supporting at this area right here. Now, I'm not seeing the buys happening on this pair, because if we're using the logic of gauging momentum and, you know, fading the pullback, we're seeing a strong initial pullback, still strong. Okay, no more lower lows, right? No more lower lows to the downside. Now, if that's the case, then this would be a V formation, correct? If that's the V formation, we did a test, still not able to go, and we could go from here, right, for a second test. But just look at how strong this is, and look at how weak the buyers have been along the way. There is just no strong buyers showing up, even on the V formation. So I don't have too confidence for the buy side, but that doesn't mean that the sell is going to work for sure. Again, the way that sellers are moving right now is very, very weak. Look at how many candles it's taking for price to move down versus the last move taking 2 candles to go up. If we see a strong breach down, perhaps we can very easily see silver getting at least down to 63. Yeah, 63. That's at a minimum. Okay, so yeah. Again, these are very clear things I'm looking at for this week. Still, you know, keeping an eye on gold. I'll update my X post to show you, you know, where things are going on gold, so you guys can follow along. Oil, yeah, we can look at oil. I was looking at it earlier, but there's just not much to do on oil. We see more or less the same thing, everything just going parabolic, right? And then a very strong high volatility candle coming down like that, and then we're struggling towards the upper side. It almost just looks very, very similar to gold and silver, right? But I don't really know about this. I still want to see more price action. Again, we do see that, you know, it's the very exact same move that's happening across the board, but this one it's not correlated at all. But you can see in most price action, things repeat themselves, right? We see consecutive move towards the upper side, a huge sellers rejecting, forming this pullback right here, and then when the buyers really try to go, it's not really looking like it's going, right? Again, it looks very, very similar to gold and silver, right? If you don't see that, then you need to get another glasses to really see it properly, get prescribed. But yeah, buyers are still showing a lot of weakness. I don't see the buyers going anywhere. Would there be a trap happening around here? There might be. If we go down to the 60, we see, you know, actually on 240 we can see a V formation. You know, one leg towards the downside, second leg towards the downside, no more lower lows. Look at this V formation that happens after no more lower lows right here. Strong, right? Lopsided V formation, support equals resistance. Just look at the way that's going. It's really, really weak. With all that said, I think the buys, or the power for the buy side for oil, is pretty much gone right now. I wouldn't suggest buying it anymore, but you know, if we do form a lower time frame trap on the 60, that will look something like this, breaching down. You know, we could see, you know, a bigger move towards the downside. So this area here still looks very interesting to me. You know, even right now we open with the market gapping up, pushing down, push, no higher highs. So I'm not gonna make the same call as gold for this one, but I do see a short-term sell if, let's say, if we do create a trap towards the downside. That's my opinion on oil. Ron, you're asking what about supply and demand in relation to silver? Silver demand is very high. Yeah, that's what everyone says, right? And, you know, people are saying the exact same thing for gold. Ask around everywhere or ask around anyone, people are going to tell you gold is, you know, the best investment to do right now. And because everyone is thinking along the same lines that, you know, gold and silver is the best thing to buy right now, it's going to create a bubble. That's how bubbles are going to be created, right? And that's why you're seeing this gold and silver demand is so high. They're both correlated, right? The higher the demand is, you know, it gets inflated, and then there's a bubble, and once the bubble has formed, you know, it could easily create the top. That might just be the top. Okay. All right. Someone talked about BTC last week, and you know, along the lines of what we were talking about earlier. You know, seeing how well one party does, and see how much power it has, and if it does not have enough power, we want to be thinking of potentially the opposite side. Using that sort of framework, we can actually apply that to Bitcoin, because Bitcoin has the exact same thing that was happening last week. So if we go to Bitcoin right here, someone asked about Bitcoin last week, so I'm just gonna briefly talk about it. Let me do this market replay right here. So we were here last week, and I was saying price is probably going to pull back into this area just because there's a trap there. It's the same trap that you guys have saw on gold, right? It's the same exact look, right? And this is why pattern alone does not work. You need to understand price action in order for the pattern to work. So what was the pattern? The pattern is, you know, if we're just using, you know, the concept of trap, we know price went up, pull back. Obviously, there's going to be buyers at this area right here, right? If we drop down to the lower time frame, 1 hour time frame, you know, these are areas where buyers were buying, right? On top of this red zone here, people were buying, and then boom, crash towards the downside. Okay, so going back to the daily, we know buyers are trapped there. Okay, fine. If buyers are trapped, we are in a downtrend. This looks also like a range, right? This could be a fake breakout, and if we have a retest, price could move down very, very quickly. This was the scenario, the exact scenario that I was talking about, right? I watched the recording earlier, and I was pretty confident that this is gonna sell. Okay, so when you see clear price action like this, people are going to be confident that this move is going to go down because it's so clear, right? It's a range breakout that failed to break up towards the upper side, right? Okay, so that's the bias that we have in the market, knowing and hoping, not hoping, but the analysis here is saying that price is going to go down, and just watch what price actually does. All right, the whole bias is waiting for price to go down. Is it going to go down? Let's see. We have one move challenging, you know, this area here, rejecting. Is it moving down? No, still holding, right? Still holding. At this point, it was still very, very interesting, because as soon as we have a breach towards the downside, you know, I'm looking at this on the 240 time frame, and I'm looking at this uptrend. All right, I want to see this uptrend turning around. As soon as this uptrend turning around, confirming that this red zone is releasing any trap buyers here, and this lower time frame uptrend is also turning around into a downtrend. This is exactly the P2P scenario that I'm looking for. A trap on the lower time frame that's happening on a higher time frame trap, right? You guys should be familiar with this. If we see that happening, a pullback there would be an easy, straightforward sell for me. But we're still holding ground, right? So I'm still waiting, right? If this trap is that strong, if the whole analysis of sell should work, this should happen, okay? In fact, we do see sellers selling. So this guy is actually performing. right? He is actually performing to push price down. But as traders, we want a little bit more confirmation, right? In this case, I wanted to see a little bit more before committing to the sell. And if we go back to the daily and see, you know, what's actually happening there. Daily. Still holding grounds, all right? Still no breach towards the downside. Boom, right? Pushing up, huge rejection back down. Now, when you see things like this, rejecting back down, you have to start thinking, it has to go down now, right? There's just no way it's not gonna go down, all right? We have this this range here, price is rejecting, holding at the, you know, top end of this range. It has to go down now. If you show this chart to someone who just learned how to trade and after reading baby pips, they're gonna say this is gonna go down. Correct me if I'm wrong. Give me a yes in the chat if that's, you know, what you're thinking. It has to go down. Now, knowing that it has to go down, again, as traders, you want a bit more confirmation, right? Because just knowing that it has to go down doesn't mean it has to go down. Because on the lower time frame, 240 time frame, we're still in an uptrend, right? Things still look pretty bullish, right? Buyers are still holding grounds. The guy who started the buys are still around. So if this does not happen, things still keep holding ground, we are definitely gonna go up, right? This is the part where you have to start thinking, perhaps my selling idea is not working anymore. Perhaps my selling idea is turning around into a buy idea. So now I need to switch sides to look for the buys. You're not particularly switching sides, because if I look at the 240 time frame, we're still pretty much in an uptrend with a very, very deep drawdown, a very, very deep pullback, all right? Very, very deep pullback, very, very deep pullback, huge V formation coming down, test, and then potentially going, right? And if we really fast forward here, you know, we see price hovering around, and then this morning, you know, reaches target right here, reaches the recent high, just like that. All right, so this is another situation where you start out with a framework to look for a particular direction. In this case, last week I was talking about potentially looking for a sell. But then as things progress, you want to see how well are the sellers performing, and as the sellers show what hands do they have, right? Like this, and then that tells you they're really on the back foot and things are potentially moving around. We have to switch sides to look for the buys. Does that make sense, everyone? So alongside what were we talking about? Gold is something that, you know, I'm still keeping an eye on. Silver as well, you know, potentially. Someone brought up oil. Oil could be something that we might see happening in the exact same way as gold. So we'll just keep an eye on that. But what I'm interested in right now is potentially yen strength. I'm seeing a bit of yen strength coming in. Actually on pound yen. Again, I'm looking at this on a higher time frame, and what I'm seeing here is things are slowly shifting. Okay, things are slowly shifting, and we are seeing that, you know, this is sort of forming, coming into a trap area right here, right? But again, it's counter trend, right? It's counter trend, and it definitely does not have all the clear picture. The clearer picture the other pairs have from last week or the earlier market I was talking about. So it's not as clear as I would like it to be, but I'm seeing some short-term strength from the yens coming in this week. Primarily looking for, you know, this sellers pushing down. We have one leg pullback, and then the second leg towards the upper side. You know, the move towards upper side previously was just 2 bars, now covering more or less the same distance, but, you know, divided into 1, 2, 3, 4, 5 bars towards the upper side. So there is weakness coming in, at least for the pullback. So a few things could happen, right? We could see some pullback and drop this week, or we might, you know, just stall and then continue dropping lower. So if we go down to the 4-hour time frame, you know, this is showing a lot of signs of, you know, strong sellers pushing down. Right now it's not the time to sell yet because there's no SNR to lean on. This is a trap above you, but if the sellers are really that weak, you're not really waiting for a pullback all the way up there. You know, I want to see, you know, if price is gonna make a continuous downtrend and then potentially get on a pullback to look for the push down. Right, this right here, that's what I'm looking for this setup, this pound yen trade. Okay, so a short term, depending on what time frame you're looking at, a short term downtrend for this week for pound yen is what primarily focus would be. But yeah, I'm looking for something like this to happen. Okay, and then for something a little bit more, even more short term, I'm looking at, oops, what the heck is this? A demonstration. The heck is this? Magic tool? Is that gonna help me make 10 pips every time I click buy? Okay, anyway, the other one that's a little bit more short term is Euro Pound. Euro Pound is in a very clear downtrend. Okay, yeah, we're in a clear downtrend in the Euro Pound. We have been in a downtrend for some time now, since two weeks ago, right? And I'm still seeing that there is potentially move towards there is still power left to move this lower. So I'm still eyeing this for a potential move down. This is, again, if you really pay attention to what I'm looking at here, it just looks the same, right? Again, I'm just looking at this range here, a fake range breakout, right? We're now pulling back into this potential trap area right there, which might provide an area for a short-term sell, right? We are in a downtrend and we are also being supported by this SNR on the left, right? So there is a lot of things going on for the sell side. Analysis here. Volume also looks okay, I suppose. It's not the best because we have high volume pushing down the sell side, but we can argue the same thing for the buy side. There is buy side volume here as well, right? So volume is not telling me that much. Volume is not telling me that much either. So, but in terms of the downtrend, it's there, the trap is there, you know, that kind of things, you know, it's there for supporting the sell side. If you guys are, you know, gonna take this trade as well, just holy shit, stop spamming. Yeah, stop spamming, man. If you take those trades, just tweet at me, you know. All right. Yeah, what was I saying? There you see what you have done there. Lost my train of thoughts. All right, that's the end of the webinar. I'll see you guys next week. Cheers. Bye for now. Okay. Let me just go down to the lower time frame. Okay, so yeah, what was I saying? I was saying there's a push up, pull back here, and then buyers were looking to buy, right? And you know, this is an area where it's very pivotal because we know a few things. We know. Let me just use the market replay. The good old market replay is not working. Okay, right here. Okay. This was the range that we were looking at, and there's a support equals resistance right above us. We are in a downtrend, yada yada yada. You know, you all get the idea. Range, right? And then what happens next? We see a strong breeze towards upper side, and then price is holding at this juncture right here. Okay, what does that tell you? It tells you that buyers were buying, right? They're not buying at this range high here, but they are buying the flip side of this support equals resistance area, and buyers got trapped. Okay, market open right here this Monday morning, Sunday night, depending on where you are. But I see buyers being trapped right there, right here. Okay, we haven't really taken out the range low yet, so this fake range breakout trade could still perform. So potentially, you know, still waiting for price to pull back into the high end of that range and see if we're really gonna hold. So When I was looking at the markets this morning, this was what I was thinking about. If we can, price can really pull back into this area and then really show signs that the sellers has what it takes. If it can push price down like that, okay, then there is a good chance that the sell would still happen. Okay, use the exact framework for the analysis I did for Bitcoin for this Euro pound trade. I'm not gonna speak too much into it because you're not gonna be able to learn if I give you all the exact scenario, but the exact scenario happened on Bitcoin, right? So use the exact framework to really analyze this Euro pound trade and see what does the market do each step along the way, and see if there's a potential trade here. Okay, on body, let's give it a go. We have 10 minutes left, 9 minutes left. Let's give it a go. What do you want to look at? German 40. What's that? Bund? Is that Bund? What's the ticker for German 40? Bund. Is it FGBL? Something like that. What else do I have on the cards for this week? Yeah, looking at all the dollar pairs this morning, all the dollars are showing a lot of strength. I'm not too interested right now with the dollars. I'm not saying that the buys for the dollar strength is not gonna continue working, but I want more information. Yeah, I want more information. Okay, Salman, you're asking, Lucas, please take us through your daily routine. First thing you look at in the morning, the catalyst. Do you look at big candle to signify activity on the pair? How many times do you scan the market? There's no magic potion here, right? You wake up in the morning, you look at the markets, you just steam into whatever feels good, hit buy with 10 lots. It's pretty much how I roll on a daily basis. For God's sake, everyone's trying to understand my morning routine. Okay, seriously, here's what I do. Ready? I wake up at 4:17 a.m. every morning. I go to the side of the bed. I'll do a 30-minute meditation. And I'll have a cold shower right after, and I'll go for a 5-kilometer run, and I'll come back and do another 30 minutes of meditation, and then start journaling for another 30 minutes, and then I'll start scanning the markets. all this thing of morning routine, all that kind of stuff, don't look too much into it. It's what I have to say, right? If your morning routine is really good, yeah, I do boxing as well in the morning. Okay, what I'm trying to say is, you can have an excellent morning routine. You can have an excellent morning routine, setting yourself up the best possible way, but then when you scan the markets, you take bad trades, and then bad trades is gonna affect your psychology, and your psychology is gonna affect the next trade, so on and so forth. That morning routine is not gonna help with that, because sometimes I see a lot of people saying that your trading is very bad. You have a lot of revenge trading because your morning routine is not good enough. Yeah, I get all of that, right? You don't want to just steam into the markets whenever you wake up and you don't have all your analysis done, of course you don't want to do that. You want to at least scan the markets properly before the market open, and then start getting in on the trade. But then when your trade does fail, it has almost nothing to do with your morning psychology, provided that you have already done your morning analysis, right? The only thing that you need to really focus on is being able to analyze the market on a higher time frame, lower time frame. It's as simple as that. Whatever time frame you're trading, use your big boy time frame to really understand the overall market direction that you're trying to trade, and then on a lower time frame looking for an entry into it, right? I'm really simplifying it, but that's your higher time frame analysis and lower time frame analysis combined, making it your morning analysis. As long as you're doing that, but you still feel that you have psychological problem, then you have to start thinking about, am I revenge trading for the wrong reasons? Am I just trying to make money here? Am I not focusing on trading the right way, and I'm just focusing on making money? Because there's a difference, right? Because if you trade the right way, you may still not be able to make money on some trades, right? So then maybe focusing on, is there a flaw in your education you need to fix, right? It may not be tied to psychology. I will only say psychology is something you want to tackle on if you are able to read the markets really well. You know how to get in on the market, get into the trades, into the markets really well. But you find times where one small mistake is going to lead you to a cascade effect of bad trades, right? But if that happens, then okay, maybe it's psychology. But then if you're always doing your market analysis, but you're still getting in, you still have bad trades, you don't know where to exit, then it might just be the educational part that you need to fix. So that's something to really think about. Okay, I don't think I gave you the answer that you are hoping for, but just don't forget your trade analysis and your education, because that could also play a bigger role than you think in terms of instead of just psychology. Okay, last question here before we call it a day. Do you place your trades on TradingView or on your broker site? I place it on my broker site, not TradingView. I just use TradingView for charting. Okay, hopefully that makes sense, guys. Oh my gosh, everyone's just trying to understand my daily routine. I may have to charge for that. Just taking a GoPro everywhere I go, live streaming 24/7, 7 days a week. And then you guys just follow along the live stream. I'll charge $10 for 1 day. Who's gonna sign up? Okay, all jokes aside, your morning routine, your market analysis, it's very, very down to you. You really need to know, how frequent does your trade actually set up. If your trade sets up, I don't know, like 3 times a day, then you have to, scan the markets 4 or 5 times a day, right? Really look at everything 4 or 5 times a day. But, the main thing that you need to focus on every morning is waking up and looking at your higher time frame. Right, looking at your higher time frame and then looking at where you want to engage. Once you know where you want to engage, then you simply just wait for price to get to the area where you want to engage. Wait for price to set up there and then get in. Throughout the day, your job as a trader is just waiting, right? You're just basically waiting. right? Of course, you don't want to have too many pairs setting up at the same time, because then it pulls your attention away from the key setup. So, you know, just focus on the core market, or the core thing that you want to be focusing on. Let's say that today there's 8 pairs that looks pretty decent, right? From the 8 pairs, just filter it down to which one is the most likely to happen the soonest. Let's say you filter that down to 5 pairs. Again, from the 5 pairs, you know, then you focus on, okay, there's 5 pairs happening right now. Which one is closest to the area where it's gonna engage from, right? Let's say if I'm looking at dollar CAD, I'm looking to buy, right? And let's say we are right here, right here. Okay, let's just say we trade on the 15-minute, and let's say we're looking to buy right here. See which pair is closest to the area of engagement, right? If this pair is closest to area of engagement, then that becomes the pair that you want to be focusing on, and then checking maybe every hour, depending on what time frame you're trading, every hour, every 2 hours, so on and so forth, right? And then you're just doing that rinse and repeat throughout the entire day, right? Some people have time to do it 2 times a day, 3 times a day, but again, it depends on the time frame you're trading. Yeah. Does that make sense for the routine, guys? Yeah, I've made a video about the routine before. You guys can check that out. You know, I'll post a thread on X about, you know, my daily routine. Okay. Yeah, so that's pretty much it, guys. There are still some questions, but yeah, we'll catch up next week as usual. Right, so do not worry, we will catch up. Now, I'll see you guys again next week. I need to head to bed now, right, because I need to wake up really early tomorrow at 4:17 a.m. Otherwise, I'm gonna miss my morning routine, and my whole trading is gonna be all fucked up. So I'm gonna head to bed soon, and I'll see you guys next week. Yeah? Alright. Cheers, fellas. See you guys soon. Trade safe this week. Trust your process. And make sure you get your morning routine down. That's the theme of this week.